Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the gold market. So you can see market has dropped recently, and this has happened actually on the background of relatively quiet markets of the dollar index and 10-year bonds in the United States. So if we take a look, 10-year bonds just has jumped on the results of the Trump victory, stands flat. The same we could say about dollar. Here is only today started with some pullback, but in general market was standing flat. And this collapse on the gold market could mean two things. First, as investors probably is closing the positions that they have opened for some insurance, scaring of the possible unrest in the United States results of the elections. So currently they are closing them. Second, from the technical point of view, it means that we could get the retracement of the bigger scale. Actually, we talked about this within the recent 2 weeks, that gold market is coming to the point where theoretically deep retracement might happen. It doesn't mean that this action is already the reaction on the all-time OP that we discussed. But in the short term, on the daily chart, it still might be a bit more extended. So recently on these upper directions, take a look. Actually, since the summer we had all very small retracements. That was in a context of this upper direction. But currently situations don't solve that. Theoretically, we could get a more extended retracement. For example, the double retracement. So it might be first to the 26 area, then potentially it could reach even 25. But this will not be something really outstanding because, well, actually, this will be still very small compared to the rally that we've got previously. Besides, on the weekly chart in the weekend, we talked about the possible patterns and fib levels that we considered. So if this retracement will happen, it will provide a lot of opportunities for trading on the higher time frames. But before this possible retracement, we probably will get some bounce because market currently stands in the confidence area 2670, and take a look, it has dropped inside of the daily average sold. Today the Fed meeting, and that's why here we could get some maybe retracement or something. At least technical, this is not a good point for taking the new short position. This collapse is done right now, so we do not need this level anymore, and market stands in a strong support. Scalp traders theoretically could consider some bullish patterns might be formed on intraday charts, making the bets on some possible upward retracements, a minor bounce. But potentially on the daily chart we could return back to the idea of this possible hand shorters. Acceleration here on the slope of the head seems absolutely normal and natural for this pattern. This is good sign. So potentially we could get this pattern if market will reach next week, for example, 26 area, it will be neckline and also fib level. And in the case of kind of the ABCD, you could imagine that this will be somewhere around 25, so potential target of this hand and shoulders. But at the same time, I wouldn't hurry up with making the final conclusion, because if you take a look at the weekly chart of the gold, you could see that on the weekly chart, this market is flirting around MACD. Potentially, it might be the grabber. So before making conclusions concerning the deep retracement and what will happen, let's wait for the closing of the week. If we will get the grabber, the game could change right in the next week and market could try to keep going higher. At least this pattern, once it will be confirmed, definitely should hold us from taking any short position until situation with it will be resolved. Either market will drop below it, erasing this pattern, or if it start acting with that, we should be prepared for taking out of this top and moving to the new highs. That's the reason why I do not want to make some, as I said, conclusions and immediately take the short position. So two reasons. First, the possible grabber. Second, market is overextended to the downside on the daily chart. On the fall time frame chart, you could see what has happened with our potential hand shorters. So actually we haven't got chances for entry on this pullback. This was our central scenario. This is difficult to treat as a shoulder because, well, in this case, neckline should be too steep. So probably we could say here that the hand shoulders has not been formed at all. The market has shown downside breakout and completed the ultimate target of the butterfly, which is 1618 extension on the whole butterfly body. It's right there on 2658 and 660. It's around this support area. Currently, as I said, so if you would like to take the bet on the long side, theoretically you could keep an eye on the hourly chart, watching what will be formed here. As a potential target, you need to use these two levels. Probably hardly will get any upward rally, if only Jerome Powell for goodbye will tell something really outstanding. But somehow I have some doubts that this will happen. So this is classical bet on retracement. So I'll take a look on the pattern. Maybe minor hand shoulders will be formed, maybe something. If you will get something theoretical, that will be your two targets: 27 circumference resistance and 2683. So it's two potential targets for a bounce, because in fact on the daily chart we have a kind of the stretch pattern, market at the confluence support and daily oversold. Some pullback here is just necessary for the market. And that's actually what we have on the gold market. In two words, we're waiting for a closing of the Friday session on the week, just to understand whether grabber will be formed or not. If no grabber will be formed, market will close somewhere in this area or slightly lower. Then we turn our attention to possible hand shoulders pattern, the nearest 1-2 weeks probably, and its potential target. If grabber will be formed, we do not take any short position, and waiting what will happen with the grabber. So either taking the position with the grabber. So this will be different scenario, suggesting taking out to the stop. Finally, on lower time frame, as I said, scalp traders could consider current support levels as a background for possible taking scalp long positions. But as I explained yesterday, be aware of the taking any positions currently on the long side, just to avoid what will happen with the hand shorts. If you remember, we talked here that potentially this was also bullish background for taking the scalp long position, but we warned that theoretically it's a risk that market will not form the hand shorts, will drop down, and that has happened, although the risk was very small here. So that's the current feature of the long position in the moment. So that's what we have currently. Let's wait for a Fed and see how situation in the gold market will change.